Hello traders, I'm shooting this video about the complete tutorial on 4 different types of RSI divergence because I want you to spot these divergences in a correct way and a much easier way. Alright, let's start the video. Majority of the traders I think use the RSI divergences this way. Even I used it like this when I was a starter in the markets possibly 18 years back. We connect the highs, we connect the highs in RSI and the price and the lows in the RSI and the lows in the price. I'm not saying this is completely wrong. Okay. I'm not saying this is completely wrong, but this is not completely right. Trust me. I'll show you multiple examples about the same, multiple charts also. But before we go ahead, just let me share with you some basic information. Now, what is RSI divergence? RSI divergence is nothing but it is the difference between the movement of price and RSI. RSI is an oscillator which is built with the calculation of the price, but at times the movements can be a little bit different. And these differences in the price and RSI will give birth to continuation and reversal patterns in between the price and RSI. So whenever the pattern is continuation, it will be used for swing traders or momentum traders. And if it is a reversal pattern in RSI, it will be used by a contra trader. A contra trader is generally a person who buys at the bottom and tries to sell. I'm using the word tries to sell at the top. It's very difficult, trust me, but I'll still show you some examples. Okay, let's move ahead. Traders using RSI to spot divergences should actually rely on a line chart. Majority of the times I have seen traders using candlestick charts or any other forms of chart. Once you start using line chart, your work will be much easier. It will be precise, it will be correct, and you will be able to spot these divergences much faster. You may not have heard this before, but trust me, once you start practicing on the charts, you will learn it very, very quickly. Let me show you a few examples. Now, there are 4 different types of divergences: positive classical divergence, negative classical divergence. These two are for reversals, trend reversals. And then hidden bullish divergence and hidden bearish divergence. These two are for continuation patterns. Okay? I'll show you examples. Now, over here we can see that RSI is making a higher low. Price is also making a higher low, but is it really that easy to understand and spot which low to pick? Probably you will have to look at a very long time and then probably you will be able to figure it out. But what if I can do this much faster and much precise? Let me show you that. See this thing. Is it easier now? Yes. Why? Because we do have this low, then we have this low, and if you compare with the lows in RSI, it is much more clearly visible with more clarity that we do have a positive divergence in the price. Now let me set the context here. First, what happens is generally market is in a downtrend. Price hits a low, new low, it shoots up, gives a short-term pullback, comes down, makes a lower low which is lower than the previous one, 2 is lower than the previous one. RSI is also trending down with the price, but when number 1 happens, you can see this is the low. At number 2, this is the low. So generally, price makes a lower low and RSI makes a higher low. That is when we have a positive classical divergence, and it is a heaven for contrarian traders. Generally, contrarian traders try to buy over here. Trust me. Okay? One more important point, like say for example, this is price. Okay? This is price, and now I'll draw RSI over here. This is RSI. When the price is still going down, you will say, okay, price is making higher low over here. One small change I will have to make, just give me a second. Okay. So you will say possibly that price has made a lower low, but RSI is making a higher low. Now we have a positive divergence. No, this is not a positive divergence. This is just a sign that the market is getting tired to go down. Market थक रहा है नीचे जाने के लिए. जब प्राइस ऊपर जाना चालू करेगा, when price starts to move higher and RSI also moves higher, this is the time when the positive classical divergence is complete. So I think this is the point where the positive classical divergence comes into existence. Okay? Let's move on to the next example. Again over here we have a very steady downtrend. Price makes a lower low, RSI makes a higher low, and the price reverses. Now, one important thing which I want to share with you is, initially as a trader when I started 18 years back, even I used to do multiple mistakes, but with time I have learned this, that when you are using positive or negative classical divergences, I'm using the word classical, not hidden, do not compare intermediate highs and lows. Say for example, you say, okay, I'll be comparing this low and this low, or this low and this low. No, these two are pretty much far away. These two are still okay, but comparing this one and this one is, I think, out of context. You should always look at immediate ones, immediate, extreme immediate, then you will have the correct result in place. You can see how fast the price from 84, 85 levels has rallied till 94 and later on till 96. So when you're using positive classical divergence or negative classical divergence, always compare the immediate highs and lows. If you're comparing the intermediate ones, I think guys, you need to change that. Okay? Let's move on to the next slide. Now over here, we have a negative divergence. Price already was in a bull trend, very strong, very high momentum. Suddenly what happens is price makes a higher high. RSI makes a lower high. Now over here, one important point I want to share with you. In a bull market, generally if you're trading from the daily chart, if the weekly chart is way stronger in terms of the rally, the momentum is very strong, then every time this reversal may not work. What will happen at times, I'm using the word at times, the slowdown of the rally will happen, which means the rally which is going up, it will slow down, it will consolidate for a while, it will stop moving ahead, but later on धीरे 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 rally वापस start हो जाएगा. So at times it is a slowdown and at times it is also short-term top. So in this example, we do have a bull market, higher high in price, lower high in RSI, and we have a negative classical divergence in place and the market shoots down. It creates a short-term top. So from 188 or 187, this stock comes down to 168, correction of 20 rupees. And if you watch clearly, we have a lower low here in price, a higher low in RSI. So immediately we also have a positive classical divergence. All right. So these divergences are very, very strong in nature if you use it in the right way. And by the way, if you are liking this video, if you're learning something really good in this video, let me know with your comments below and also share it with other traders so even they can use this information in their personal trading. All right. Now going ahead, what we can see over here is RSI, sorry, the price makes a higher high. Sorry, higher low. I'm very sorry. Price makes a higher low and RSI makes a lower low. Now this time we are talking about the positive hidden divergence, which is a continuation pattern. यहाँ पे हम रिवर्सल की बात नहीं, कंटिन्यूएशन की बात करेंगे. जनरली इट इज एक्सट्रीमली यूजफुल फॉर स्विंग ट्रेडर्स or momentum traders. Keep this in mind. If you're a swing trader, this information is very, very important for you. So again, I'm repeating, price makes a higher low, RSI makes a lower low. So at this point, at point number 2, there is a very decent high probability that the prices will shoot up, which it does. Again, market rallies up, dips down, makes a low at 0.3, shoots up, comes down, makes a low at 0.4. Now we have a higher low, in price and we have a lower low in RSI. Again, we can see there is a difference of movement in the price and RSI. Again, at point 4, there's a very high probability that prices will shoot up. Okay? So this is again a positive hidden divergence, which is a continuation pattern used by swing and momentum traders. And guys, when these work, they work really nice. Trust me. Roaring bull market, uptrend. Point number 2 higher than point number 1. Okay? And this time we have a low in RSI which is much lower than previous one. Now here there are 2 points which you need to understand. अगर आप प्राइस को देखें तो ये वाला जो लो है वो प्रीवियस लो से उतना ज्यादा ऊपर नहीं है. It is higher but little bit. But the RSI is extremely lower than its previous low. When this sort of pattern emerges, generally prices can move up very fast. And the probability of that happening also is very high. Number 1. Number 2, if you are using positive hidden divergence, again I'm using the word hidden divergence, or you are using negative hidden divergence, which I'll be teaching in the next couple of slides, then always try to compare intermediate lows. हमने negative divergence, positive divergence, which are classical in nature, उसमें हमने क्या सीखा? Use the immediate highs and lows. But when you are using hidden divergence, you will have to use intermediate, because yes, at times you will find immediate highs and lows if you are very, very lucky, but majority of the times you will have to use the intermediate ones. And why I'm using the word intermediate, if you look properly, this is the first day, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th, 11th. So after a 10, 11 days, this positive hidden divergence comes into existence. So that is the reason I was saying that they are intermediate in nature. Always remember this. And I think with practice, you will surely understand. Okay? Now, this is a negative hidden divergence. In this negative hidden divergence, we have existing downtrend. We have a high in place and then we have a second high in place. I'll give numbers to it so it will be easier for you. We have number 2 which is lower than number 1, a very, very easier way to understand that we are in a downtrend. But we compare the same number 1 and 2 with A and B in RSI, it is different. B should be actually lower than A. Why? Because most of the times price will move with the RSI, but this time it makes a higher high than A. B makes a higher high than A in RSI. So at point 2, it's a high probability setup that the stock or the index, whatever you are talking about, I think this is Nifty, you can see this is Nifty. There's a high probability that that market, that stock will come down. All right. Now over here again we have, this is probably Bank Nifty, I think. Bank Nifty in a downtrend makes a lower high. I'll give numbers again, 1 and 2, A and B. This time the difference is very high. 2 is lower than 1 little bit, thoda sa niche hai, little bit. But B is much higher than A. You can see A is probably at just above 30. B is closer to 50 in RSI. This is the 50 level of RSI. And that is the reason at point number 2, there is a very high possibility, probability, not surety. Nothing is sure in the markets, but a very high probability that the Bank Nifty will shoot on the downside. Okay? So these are continuation patterns. Again, I repeat, why continuation? Already in a downtrend. Okay, we have a signal that we have a hidden divergence over here, negative hidden divergence over here. Price is making lower high, RSI makes a higher high, and probably derivative traders may try to sell the Bank Nifty and it drops. Again over here at the bottom, we have a lower low in Bank Nifty, higher low in RSI. Again, price shoots up. So trust me, these RSI divergences, they are very, very strong and potent in nature. I hope you have understood the power of RSI divergences. So far what we have learned, my friends, like when you're trying to use RSI divergences, try to use line chart. It will be very quick. Your work will be very quick. It will be precise, and chances that you know, probably do a mistake in finding RSI divergence will be much lesser. Trust me. Instead of candlesticks, always use the line chart. ठीक है? इसको आप practice करिए. Practice this for few days. I think you will be getting a hang of it. For classical divergences, यानी कि what type of divergence I'm talking about? Positive and negative, which are reversal in nature. Always look for immediate highs and lows, not intermediate. Intermediate किसके लिए ढूंढेंगे? Hidden divergences के लिए. ठीक है? And at times classical divergences can act as a trend reversal and at times as a slowdown. I showed you in a slide where, you know, markets were in an uptrend, and when the negative divergence came, we just went for a slowdown because a higher time frame trend is an extreme high momentum. So this can happen. At times it will be a top out, at times it will be just a slowdown. And lastly, as I'm saying, hidden divergences, if you are generally a swing trader or a momentum trader, even if you are a momentum trader or a swing trader, then hidden divergences are very, very important. Trust me. So when you're looking at hidden divergences, if you are very lucky, if you are very, very lucky, then at times you will find immediate highs and lows where you have these hidden divergences, whether positive or negative in nature. But majority of the times you will have to try to connect immediate highs and lows, which are the big ones. And you will ask, sir, which are the big ones? Trust me, with practice you will get a hang of it. धीरे धीरे आप जब practice करोगे, आपका math सब बैठ जाएगा जगह पे. You will be able to do it. Trust me. ठीक है? So my friends, I hope this video has helped you to possibly get your skills a little bit better than RSI, a little bit better than what you were doing before. And if you find this video useful, as I told before in this video, please comment in the message box. I will understand whether my videos are helping you or not. It will also motivate me to make new videos for all of you. All right? Trade wisely. Thank you.